It's loading up, sir. 1 second. Sir, we are all set, sir. Now the meeting is live streamed. So, very good afternoon, dear delegates. Thank you for coming back to our financial fitness program for pediatrician. So this is a financial intelligence program, the third in series 3.0. Now I invite respectfully our lead coordinator, Dr. Ajay Kumar sir, to initiate the talk and hand over to Dr. Soren sir, our speaker today. Over to Ajay sir. Ajay sir.
I am here, Dr. Pawan.
Yes, sir. You can go ahead, sir.
Please, are we starting? You started the introduction? Dr.
Sir,
Pawan,
you can start sir, you can go ahead, sir. You can go ahead, sir.
Welcome all the participants for this third webinar of Indian Academy of Pediatrics, State Branch of Telangana and Twin Cities Branch of Hyderabad and Secunderabad. This is a financial intelligence for pediatricians and practicing doctors and their families, series number 3 in this year 2024. We have labeled this latest series with a byline as a return of intelligence, that is ROI, coined by Dr. Pawan, our CIAPTCB member and our host. And I have added ek kadam aur bada ke to dekho in this journey of self-reliance in financial literacy and education. The Pediatric Academy of Telangana started 3 years back this particular program. We are in the third year with some more experience and knowledge. We have added up more faculty and more topics and subjects in the webinar. This is our third in the series. Our academic director, Professor Dr. Harish Gopal, is very diligent and working behind the screens for gathering the topics and the speakers. Today we have Dr. Chapeswaran, Professor, Head of the Department of SVS Medical College, Mahabubnagar, Telangana State. Before I hand over a minute or two with few of the points which I always tell our participant doctors, that this is a platform to learn, platform to exchange, platform to make mistakes rather than in the market where we are liable to be punished by losing our capital. So this few words, I have got 2 slides. Please allow me to screen those 2 slides. And can you just allow me to share the screen, Dr. Chapeswaran?
Yeah. No, I am not host.
Dr. Pawan?
Okay.
Yeah.
Sir, you can share, sir. You can co-host now. You are co-host now. You can share.
Yeah, I will. The group F3 of Pediatric Academy Telangana is becoming popular day by day. We have got 2,000 members in our WhatsApp group, and it's a self-learning process by the doctors for the doctors. As I said, we are the Pediatric Academy of Telangana Pediatricians IAP members, and we are started the program about 3 years back. And the small motley group of pediatricians from Hyderabad and Andhra Pradesh state has started this program with 5-day webinars in the first year. Then subsequently, we changed it to a financial intelligence for practicing pediatricians. As I said, this is an educative and awareness webinars in the financial literacy. And it is a platform for the doctors and their families and to learn and spread the knowledge of personal finance management. We are grateful to the Pediatric Academy of Telangana President Dr. Sheshu Madhav and the Twin Cities branch of Hyderabad and Secunderabad IAP, President Dr. Dr. Sugnakar Reddy. We have started during the phase of Dr. Surendranath, continued with Dr. Yashwant Rao, Dr. Arkala Bhaskar, and the President-elect Dr. Sankoj Bhaskar. The Secretary Vamsi Krishna and Vaidyam Chakravarti as the Treasurer of the State Branch, and Dr. Lakshman Garlapatti was a past President, and President-elect Dr. GVL Chari, with Secretary Dr. Sridhar and Dr. RSV Sri Krishna, Treasurer, and our also a technological support for the recordings. We already had, as you have seen, the first talk was on tax harvesting and tax savings, and the second was by Hindu Undivided Family talk last 2 Sundays back by Sri Balwanjan sir, the Chartered Accountant, our guest speaker from Mumbai. And this webinar, we are having stock selections by Professor Dr. Chapeswaran. We are planning to have some topics which I have displayed here: bonds, funds, portfolio diversification, stock market science and management of bubbles and bursts, index investing, retirement planning, and insurance. So today, coming back to the eagerly awaited program, Financial Intelligence for Pediatricians, third webinar on this April Sunday, 21st, 2024. We are having Professor Chapeswaran, a self-learned person who has not only mastered the fundamental analysis, but also the technical analysis with his diligent and deep knowledge in this particular topic of selecting stocks for optimal returns. And we are very grateful to Dr. Chapeswaran sir for accepting to not only accept as a speaker, but regularly participate in the WhatsApp group with his very insightful, intelligent postings and also guidance to our new pediatricians or investors and doctors and their families. So, ladies and gentlemen, please concentrate, return on intelligence on this program, and take a step forward, one more step forward this year for the program on stock selection for the optimal returns. Over to Dr. Chapeswaran.
Thank you, sir, for the warm welcome. Yeah, now I'll be sharing from my side.
Yeah, Soren sir, switch on your video also, sir.
It's on.
Video, yeah, video was on.
Not able to see you.
No.
Okay.
Yeah, my end it is visible.
Yeah, make a full screen, Dr. Chapeswaran.
Yeah, I'm making it.
All the questions can be asked in the chat box, or you can directly open at the end of the talk.
Yeah. So, good evening, all. So, it's my pleasure to deliver the lecture to all the guests. So, as we will be posting in our WhatsApp group, but today we will be discussing. At the end, I will expect after my presentation, all should clear their doubts. And whatever I know, I'll be discussing about this, because individual investing is not a single size fits to all. It's all are individual and goal-directed activity. So to start with, direct equity investing is a serious business of putting money to work hard to generate more. So because we will be risking our future expenses or capital, which is for ourselves and for the family. So one needs to learn, then only should invest. If one will not serious in learning, in investing, then they should go through invest in equity through the mutual funds. So before starting my exact presentation of how to select the stocks and how to buy or sell frameworks, let us briefly about the macro, how the India is transforming and how the opportunity is a three pillars of the economy of the India. One is the India is $3 billion US. Almost it 7 years to reach. Next $1 trillion India has achieved within the 8 years, and the third $1 trillion within the 5 time frame. So now now what we are expecting, every $1 trillion will be added. So according to this economy, it is presently in the number 5 in the with the other countries. So 2030 will be, and it is the fastest growing, largest economy. 62 countries FDI are invested in India across the 61 sectors and in 30 states. Almost 2/3 of the GDP is dependent upon the exports. That's the first thing. Second thing is the political. India is the democracy. 43 Lok Sabha seat, almost 2,600 political parties are there. Of this, presently now this election we have been nine voters will be voting. Out of them, this population is almost, they constitute almost 12% of the world population. So this is the second pillar. And we have a stable government which provides a huge opportunity and ease of doing business by the present human resource. Almost present population 1.4. Out of them 1 billion are less than 35 years with an average age of 29. So most of the people are going from the lower or socioeconomic.
Lorenz sir, your voice is breaking, sir. Sir, your voice is breaking. Can you just check your microphone?
Maybe, sir, internet slow.
Yeah.
Yeah.
Okay.
I am thinking.
But your video is okay, sir. No problem.
Yeah.
Maybe you should switch off the video so that the band and broadband signals will be better. You can switch off your camera.
Okay. Audible?
Yeah, you are audible, sir.
Okay. So 2005 and 2018 and 2030, what is expected is, so in the 2005, majority are in the lower socioeconomic. 30 is majority of the population will be in between the lower middle and upper middle socioeconomic class, and they are base. So for that consumer base, so normally in family's income for this middle %, rest of them will be for the wants, and these wants will create a huge demand for production and manufacturing for the product for the selling. For them, at present are financialization, digitalization, development, healthcare and pharmacy, manufacturing, green energy. So these are the big over the next persist for around 15 to 20 years for the India. And we are in that space. It's an opportunity for investment. So one should not miss the topic. To my original presentation, we have discussed why India is an opportunity. So my presentation will be in the following talks. One is why one should invest in these stocks. What is the risk and reward? How to make a portfolio? In the return is dependent building blocks. Then the process of buying, how to review and rebalance. To create
Dr. Soren sir, kindly switch off your camera so that your voice audio quality will increase in better, because there must be bandwidth must be poor and the signals are little weak. So your voice is breaking, sir.
I'm clicking.
Yeah.
Yeah.
I think your camera switch off, audio will improve, sir.
Yeah.
Great. Go ahead, sir.
So we'll be creating wealth accumulation in our financial plan by invest the 5% of the world's wealth is with those who are employed. Maybe we may business owners or investor. So any of the thing we need to do investments. If business owners, they are running a one or two, they invest businesses too. So equities as an asset over the years has provided a better a return as compared to the gold, real estate and debt. So equity must be a part of one's portfolio. Then what are the risk and reward? There are two types of systematic risk which is our control. Unsystematic risk which is unique to each business or the sector, which can be reduced by diversification. According to the secret of winning big in the stock market is not to be, but to lose the least amount possible when we are wrong. That is control. It neither the profit of the business nor the stock price under our control. Which risk following are there and how to mitigate the company and industry specific risk? We can mitigate by diversification. We can track the research the track whether it is walking the talk or no. In the past, at least 5 accounting risk, there are 6 checks needs to be done before analyzing the company's profit and loss and cash flow statement. So India, nearly 20 to 30%, 25 to 30% of, so that's why accounting checks comes the first. Next is revenue risk, investing in business service to remain all through. Investment should be done the essential product and service which are needed over the period by the many of the people. Regulatory legal risk, one should invest in business with strong compliance and legal teams, and one should get informed in each and every business is invested whether problem can occur in that business. Competitive risk in India, any business or any place in the world, any business which generated high return on capital will always the other investors, and they are like to, and India is very much common that any the business very quick in the So return on investment very high. And risk each to show where in the supply chain risk consumer side
Sir, sir.
or the raw material sides. So whenever there should be diversified, so many people are not.
Sir, we can't hear your voice. Can you put your earphone or can you switch on to mobile platform?
These are the things one is to stick to. Return. But in stock investment, there will be. Yes.
So we can't hear.
We
can't hear your voice, sir. No, sir. It is cutting. Can you put your earphones or can you switch to mobile platform? Use earphones, sir. Use ear.
If you are using earphone, go to the laptop mic.
Now also not audible?
Yeah, it's better than previously, but we will know once you start talking. It's breaking.
Yeah. Now just.
Sir, it's audible but breaking. It's not coming continuously. It's breaking.
I am using mobile internet.
Okay.
Now audible?
Yeah.
Yeah.
Yes, sir.
Sorry for the disturbance.
Two sentences, then we'll know, sir.
Yeah. So the play of probability, what are the rewards? In a stock investment, we'll get a dividend and capital appreciations. So over the years, 43 years of the Sensex, it has given an average return of 16% per CAGR. And if one learns the direct stock investment, they have a potential to give a higher return if one can select the good quality stocks and follow the rules of investing correctly. So how we can make odds of win in our favor? So to make the odds of winning in our favor, we should identify what are the mega trending sector and which companies are the market leader and which management are efficient and honest management. If one can do this and follow the strict rules of entry, addition and exit, then can make a odds in their own favor. Now, how to do the diversification? As you have told, we can, on systematic risk, we can mitigate by diversification. So diversification is not only within the number of stock, but across the sectors, across the market cap and across the geography. As far as the number of stocks is concerned, the study shows that 18 to 20 stocks is the sweet spot. Beyond that, by increasing the number of stocks, one cannot reduce the risk. Whatever the residual risk will be there, that is the market risk. So one should have 18 to 20 stocks in a portfolio, and that may be 5 to 6 sectors. Next thing is portfolio core and satellite strategy. As I have told, only around 25 to 30% of the financial accounting is believable in India. So that creates an opportunity for satellite investment. Even if their accounting is not good, one can invest in a satellite. In the core portfolio should constitute around 70 to 80% that will provide the stability, and those are the consistent compounder. They are the track record of creating at least more than 10% sales growth in over 7 years, 10 years, 5 years, 3 years time frame. And they will be a return on capital employed of more than 15% over those time frame and with minimal debt. So to filter, we need 70% of the criteria should be fundamental and 30% will decision is taken on technical. But for the satellite, we can create an alpha. So over and above the market return, we can increase by investing in 20 to 30%. So where to invest this? in the cyclical stock, turnaround stock, emerging sectors, and the special situation. And here the decision, 75% decision is by technical and 30% is earnings growth trigger. So one needs to identify what are the earnings growth trigger. So this what they tell, the Pareto principle that sometimes what happens is 20% good allocation, they will give the 80% of the return. Here comes the satellite. Sometimes satellites may very fastly multiply. So if out of the 20 stocks, out of these 20 stocks, 4 stocks are good enough to create a return for an retirement because they rapidly compound. Now, how one needs to make a portfolio. So as we have discussed few of the sectors which are in a mega trend at present, and they are likely to be in a demand over the years because of rising middle class populations. So we can make into consumption, chemical, pharma and healthcare, industrials, financial and tech. So among them also you need to separate subsector. In a consumption, one can play of the FMCGs, textile, gems, jewelry. Home improvement, can anybody take the either it paint company, it can be wires and cables. In chemical healthcare, agrochems. In agrochem as well, agrochem is needed because as the number of population are high, there is much of the urbanizations are happening. Cultivation lands are coming down. So what there will be need of agrochem as well as the quality seeds to cater to the people's demand. Pharma companies, almost if you look at the US, almost 40% of the pharmaceutical used in US is from the India. Next is specialty chemical, hospital and hospital medical device also one part one can do. Industrial like capital good, auto, diversified and defense. And India is reliant to not to be dependent upon the defense as there is a much of the wars are happening in other countries. So India wants to become an all 100% make in India in the defense sector. And it rapidly businesses of defense are doing very good. Finance one can take from 1 or 2 banks, NBFC, one, housing finance, insurance or asset management companies, or also the depository like CDSL. Take investment one can, depending upon the individual's understanding, it may be a software or hardware or platform businesses or those companies who are doing business in artificial intelligence and cloud computing. So one needs to divide from the different sectors like this, choose these stocks. Now once choose a stock, this is most important. Most of the return depends upon the position sizing and capital allocation. Here is an example of the 20 stocks with the different returns in the left side. But in the next, what we are seeing is 3 people, the portfolio A, B and C. Portfolio A has almost equal allocation to all these 20 stocks, 5% allocation. Portfolio B has initial allocations are higher, subsequent stocks are decreasing allocation. Portfolio C has increasing allocation to the stocks. Now, what we can see in the return is portfolio A has a return of 5%, whereas portfolio B has return of 52%, portfolio C has return of negative 42%. So what it means, even if they have all same stocks, but their allocation varies, so that's why the return is varying. So one needs to allocate higher amount to the winners, and also not only that, also cut the losers. So lesser allocation to the loser, or one can exit the losers. And one should not hold on to the hope storage that losers. The next is what determines the investing return. That there is 2 building blocks to investment return. One is the entry price, another is exit price. So, and exit price should be higher than the entry price, then we will have a positive return. So how they are determined? 2 factors determine. One is the earnings at the entry and earnings at exit. Number 2 is the price by earnings at entry and PE multiple at the exit. So now, if in a business, somebody enters at a price of 100 and exits at a price of 1000, so his returns will be almost 10 times. Now, in that scenario, suppose earnings at the entry is at 10 and earnings at exit is a 50. So 5 times of the return is generated by earnings multiple. Second thing, if during that time PE at the entry is at 10, so PE at exit will be 20. So that makes a 10x return. So now the fundamental analysis tells us what to buy, where we will study about the earnings, how the earnings is generated, and what are the key drivers of the earnings. The following things decide upon the earnings. One is the sales growth. Number two, the operational profit margin, operating leverage. Third thing is the third thing is debt reductions. So if company is able to increase the sales, increase the margins, and also reduce the risk, reduce the debt, so there will be earnings will increase. So next parameter is the P that we can identify by price volume actions, and that helps us to decide when to buy, add, and sales. As in our framework, we have told you, majority 70% is by earnings, 30% is the 70% is fundamental and 30% technical analysis for the core portfolio, and reverse is for the satellite portfolio we use. Now this slide which I have taken from Utpal Seth, who runs the CEO of the Rare Enterprise and also the advisor of the Trust Mutual Fund. So what he teaches is about the value chain of the long-term investment. The process of investment are we do buy, we do hold, we do sell. But what drives those buying things? For the buying a stock for a long term, one needs a high conviction and courage. Because if conviction is not there, one cannot buy enough. And it cannot create a courage and hold with a patience without this conviction and courage. Next is to hold, even if the stock is does not appreciating, if not much of conviction is there, one cannot hold with a patience. Third thing is when to sell. These three are the important if there is good conviction and patience are there. If one thing that hypothesis is selling, insanity, extreme high degree of prices rise, or one gets a relative opportunity so that one can sell one and will enter into another business. So all the three requires a differentiated insights. So as we know the insights, it's different insight, it meaning is a deep understanding of the business or the sector. So one can wait over a long duration, even if price appreciation does not occur, if one has the differentiated insight. Now for this, what enables the structural enablers for this? Who can wait over long duration even stock is not performing? Those who are long-term investment and their capital is unlevered. So that's why the advice also, nobody should invest in a borrowed money. Next is risk reward formula. When the reward possibility is more than the risk, then they will hold on long. Always focus should be there on the business and discipline should be maintained. Next, this is also from his presentation. This is a gorilla investing. So when we are choosing a stocks, if we will go to a jungle, there are many monkeys in the jungle, but only few gorillas are there. Same is for the investment. The gorillas, the companies are bigger size. They are very rare in the businesses. As I have told you, only will be available 20%, 25% of the business are believable, and most of them, from out of them, we can get those are the large business or market leaders. Gorillas are outsized as compared to the monkeys. So they are majority, some of them are very large caps. Gorillas are not challenged by monkeys. So they have the moats. These businesses. Gorillas have a lifespan double of the monkeys. They have a longevity. How they will have create a longevity? With whatever the cash flow comes, they will have an opportunity to the reinvestment in a high return on incremental capital. Right, Jungle? So we need to identify a mega trend. So at this mega trend will be changing over the years to years. Years will be changing. So one need to identify which trend is going for the next 5 to 7 years or 10 years. Next is the right animal. Should be leadership. So these are the criteria. One has to put a checklist. Whether my business which I am choosing has this criteria. If they are, then one can invest. Next is in the very broad framework. What we'll be discussing is the checklist. What I follow. I follow for the quality, growth, longevity, and price. In the quality, first thing, minimal debt or no debt company should be. Debt to equity less than 1. Next is efficiency of the business is measured by return on capital employed. And for the finance, we can return on equity, we can use more than 15% across the 10, 7, 5, 3, and 1 year period. Then cash flow from operation, what the cash conversion is happening. Sometimes the business may be having high sales, high profit they may be, but whether the cash has been generated to her. So cash flow from operation by profit after tax, net profit should be at least 70%. Business should have competitive advantage. Out of the 10 years, at least 6 to 7 year free cash flow should be positive. Sales and earning growth across those time frame more than 10%. Margin expansion, operational profit margin more than 10%. Company should be reinvesting in their business. CapEx by CFO more than 30%. All these parameters we look in the annual report. But for the recent change, we need for the execution of earning growth trigger. So this is what we see in the quarterly results. Whether the sales growth, operating leverage, margin expansion, debt reduction. This is seen in the quarterly results. So they help us to identify any new stocks, emerging stock, turnaround stocks. We can find out in a quarterly results. So to maintain longevity, company needs an R&D expense and the competitive advantage, and they should be producing a new product and services, new joining of the experience management, new capex for expansion of the business, acquisition of the new businesses which relates or the management is confident of doing, and their expansion of new geography or company is increasing its market share. Next is valuation parameters. Large number of valuation parameters are there. Different methods are being used by different type of investors. One should choose the businesses which provides an essential services and products, sales products which are simple to understand, which people may be requiring for longer duration of period, and these products and service has a lesser chance of replacement by alternatives. Next is promoter should be qualified, experienced, honest, and has a good enough skin in the game, means promoter holding. What I consider is, if it is a very large cap, we consider more than 30% of shareholding is good enough. But in a small and mid cap, more than 50% shareholding, promoter holding is good enough. And there should not be a promoter pledge. Less than 10% is acceptable. So this is the finding a small fish in big pond is good. So always one should choose monopoly, duopoly, or oligopoly businesses, and which has a potential or potential mega trends which are likely to be they increase the capacity utilization and market share. So once we have learning this is screen, one we have find out the particular stocks. Next process to identify what is how the process to when to buy, add, and sell framework. So in the pendulum, what we are seeing, the market, the price of the stocks varies from undervalued to overvalued. in between there is a fair valuations. Depending upon one's investing style, investor can be a value investor or growth investor. And third type is contra investor. The value investors will be evaluating the stock's price and the profit potential of the stocks, and they will be buying in the left side of the pendulum. And when the stocks come to the fair value, they will be selling. But the growth investors believe that market is efficient enough. So whatever the price is available, that is the correct price. So that's why from the fair value onwards, they will be go on buying till it overvalued. They have a strict entry and exit criteria. Contra investors invest in a particular sector or stocks which are not at the present are not in favor. So now in the book Intelligent Investor, it is written the market is a pendulum forever swings between unsustainable optimism to unjustified pessimism. The intelligent investor is the realist who sells to the optimist and buys from the pessimist. This is what typical of the value investors. So both the value and growth investing are completely different. So now onwards, I will be going more towards the growth investing, which I personally do practice. So now once we have decided the stocks and we have identified which type of investor we are, we position ourselves and invest according to our philosophy. So any stocks we choose based on our framework, we need to do the stage analysis, which stage the business is. So this stage analysis, what we are seeing is initially we are telling it nearly from the July 2018 to the July 2020. Almost stocks is moving within that particular range with a minimum, very less volume. So this type is called the basing stage, the stage 1. In this stage 2, what we are seeing about the July or August 2020, there is a sudden rise in the volumes and also breakout from that range. Breakout has happened. So from there, it is considered as a stage 2. And consistently, we are able to see the prices rising constantly till nearly around the April, May of 2022. So this stage is stage 2. Stage 3, above, after rising, it is a consolidation stage, and followed by from the August 2022 onward, it has started falling. That is declining phase. Okay, so basing stage, stage 1, stage 2 is the advancing stage. Then we got the consolidation again, followed by the declining stage. So growth investor invest only in the second stage of the business. So identification of the stocks is done by the fundamentals, but entry, addition, and exit is based on purely on technicals. So this is how one needs to position. So now this is just an example. Now once we have decided, suppose one has decided based on the thing, as we are level to nearly 2007, when there is a price has suddenly risen and there is a high volume has again. So that there is an entry. So in the below that, what we are able to see is this. This is a relative strength chart. Below the relative strength, always there will be higher volume initially, price is rising, and also the stock is outperforming the broad benchmark. So that one needs to enter and one needs to continue. So that is the entry point. Next is how to add once enters in based on the thing. One needs to, this is an Donchian channel. So whatever you are getting, each step of the Donchian channel one's need to add. So one needs to add the each step. So above we are seeing a orange line are there. those are the upper part of the Donchian channel. So if the Donchian is 20 period, highest things are the Donchian channel. So in Donchian channel, last 20 period highest and the base in between and the lowest addition of the 20 periods will be here. So this chart is monthly chart. So wherever the steps are there, suppose now I am getting 13 steps are there in between each month, whichever month steps are get added up, 1:2 position. Now how to add initial position? Any stocks is taken 0.5% of the allocation. Then subsequent additions will be second additions, once that is called the testing the water, 0.5% allocation. Then if stocks price rises, one can allocate 1%, then 0.5%, 0.5%. We need 7 to 8 allocations to reach our final allocation, because in each stock, one needs to allocate 5 to 8% of the total portfolio. So now in this each step, if one could have added up is gone. But after the top, there is no more addition is needed, because stock has flattened, so one will not add any. And number 2 thing is what we are seeing towards the end, there is a fall in the stock price also falling, also relative strength becomes a negative. So when the relative strength starts falling and price start falling, no more additions one should go for as far as the growth investor perspective. Now, if we are able to see from the 2022 onwards, now last 2 years, stocks has never raised. So only similar, this stock was very good quality stocks, but the value investors, they might be buying. That's a different perspective for all. Now when to sell, again, the selling criteria depends upon the, always growth investor believe that technical are the forward things and fundamentals is always lags behind. So most often as we have entered with a technically, we added with technically on a monthly chart, and we exit with a technically, because sometimes it takes 3 to 4 months for fundamental results to come. By the time, if somebody waits, almost stock price is down by 30% down or 40% down. So here again the same example of divis. So this is, I have customized my own indicator, able to see towards the beginning. So that was we are getting a red, then we are getting a green line. So if the stock price is above the green line, I will be holding on and adding on. Again, Donchian channel, I will be adding on and I will be holding on. And when it becomes red, in addition to the line becoming red, as well as the price falls, the relative strengths fall down. There are 2 relative strengths. One is the short and long. Individually, this is 26 and 52 period. Again, all these are monthly. If starts falling and this become red, I will get exit. So what price I could have entered? So if somebody could have entered 1,000 price and could have exited nearly 3,800 or 900 level. So, and after that, if you see from the red line, now it is a consolidation. Again, if the business is good, management is good, but market may not be favorable or that period, there is a headwinds for that sector. Whenever the stocks bounce back, again, there will be re-entry one can do. Any stocks one can re-enter, and one should not marry with a stock. During the investment, one should maintain the patience. If in a value situation or still if the stock is going on rising or consolidating for a shorter period. But if there is a fall in the price or relative strength or headwind in that particular business or in the sector, one needs to exit. So always one should follow the system, have a patience, because we are the hard-earned savings and future financial security is at stake. According to Vivekananda, he has told, strength is life, weakness is death. Expansion is life, contraction is death. So always look for the relative strength. So my stocks should be outperforming the sectoral index. My stock should be outperforming, or the sector should be outperforming the broad bench index. Then I'll be go on continuing. If particular sector starts underperforming this sector, then stocks might also. Expansion is life. Always look for there should be self growth, margin expansion, and the capital expansion. So capex is doing company, or there is a increase in market share of the company, and then one needs to hold on. If there is a contraction, means sales growth is reducing, margin is reducing, net profit is reducing, then one should exit that particular stock. Now, when we are doing in this framework, intermittently one is to review, rebalance, and also reflects. So those who are faculty in the colleges, we know how the importance of reflect, because according to NMC, what he has told is all undergraduate students need to, during the process of learning, they should reflect on what they have learned. So same thing applies here also in investment. What we have done in the past, we need to describe each stock, 15 to 18 stocks, 20 stocks. We need to write down in a journal what has happened in that particular stocks and what we are doing that and what we are expecting for the future. So these three things one needs to note down. And by doing that, what has been taught, making mistake is not a wrong, but repeating the mistake is a wrong thing. So not to do the same mistake again, we need to reflect on, we need to write it down, each and everything, why I have entered, what is my expectation. Now, after the review, I know what mistakes I have made while entering a stocks, what mistake I have done while adding it, or what mistake I have. If somebody is waited, stock price is down, looking at this price is going down with a hope story, keeping it, okay, it will go up. And later when it reflects, okay, that hope story has become a horror story. That's a dangerous thing to happen. So those who keep learning will keep rising in life. So during the investment is also a journey to achieve our goals. During that journey, we need to learn, so not to repeat the same mistakes again and again. Key take-home messages from this. My presentation is learn completely before investing. This is Abhimanyu. He has learned how to enter, but he did not know how to exit. So same thing happened. I have heard from few of the friends also. So they will enter, stock price appreciation happens. When the stock price falls, they average down. And whenever they exit, it is almost down. They have lost given back all the profits to the market. That should not happen. Choose your right advisor. Yes, the advisor should not be advising only for his benefit. You're looking for this. So one needs to choose a wise advisor. Diversification is mandatory so that even if one sector have headwinds, others will do good. Risk what we can afford. So only equity investment, which as I have to unlevered capital. That is the first thing. 2, and should not be risking. And the investment equity, you should be by the time all risk we might have covered through the insurance and all. And we also need an emergency fund then to be invested amount. Avoid overconfidence. What is shown? So one should not have an overconfidence. So here the Draupadi told to the Duryodhana, are you blind, when she has slipped? So that was her overconfidence. Then she has to face. So one should not overconfidence in market and follow the system. Okay, Santanu and the Ganga. Ganga married to the Santanu with a talk that I will not carry kids. I will not have a kids. But when Santanu told not, she threw out the kids, each kids are being born. But there she left. So always need to follow the system and we should not have any emotions at all for that things. Thank you. Thank you for my presentation. Thank you. Anybody has any doubt, I'll be happy to answer.
Thank you, Dr. Soren. Wonderful talk you have delivered. And most of the experienced doctors who are here, I think will be are benefiting. And some of the newbies will take some more time to get orientated to the points which Dr. Soren has elaborated, especially the fundamental analysis and the technical analysis. You have to start learning the fundamental analysis and the technical analysis slowly and steadily, and probably it will take a year for you to become an expert, or at least confident to do what Dr. Soren sir is doing, at least 50% of it. So we now open the platform for discussions. We have Dr. Harish Gopal sir. We will collect all the questions which are coming in chat box. And also, if you can operate your own mic, kindly open it, introduce yourself, your place from where you are calling, and ask the question directly to Professor Suren sir. Open to the participants. Dr. Harish Gopal sir.
Sir, the first question was, what is the indicator you have used?
Yeah. So can I share it and show it? That will be good. Okay. So I have used few indicators. I'll show it. It will be good. Okay.
Sir, which is the EMA time frame you have used there?
Yeah, multi-EMA I have used. No, I have not used single one. I am sharing this again. Now, is my slides visible? No? 1 minute.
Not yet.
Yeah. I just showing. I have some trouble. Host only. Oh, okay. It is host only. It is showing slide.
Your
now
last slide is visible, sir. Both the
last
slides
slide
are seen.
Okay, just I am enlarging it. I just want to see other. This screen is coming. Just I will need to change it. And so I'm not able to go back actually.
So the left side you can choose a slide selector. Left slide.
Left side.
Yeah.
Yeah. Up and down you can see that arrow.
No, news here it is showing, but all participants.
No, you have to exit the old sharing, sir. You have to stop sharing and start new sharing.
1 minute. I've done so many times, but new screen. Okay, share.
Exit the old ones. Now it is moving. Yeah. Yeah.
Now, I am having trouble actually. Share. So actually, anybody can just stop share. I got it there. Okay.
Yeah.
Now
Now you open.
Now I can do, because it was gone upward. So I screen. You can talk, continue, but 1 minute. I am not. I want to share
Okay,
this.
sir. By the time you select, so which is where do you do technical analysis? It is in trading view. We
Trading
do
view, yeah.
technical analysis. And next question was, sir, which time frame do you use? Daily or weekly or monthly?
Monthly only. For the long term, monthly. And when is for this satellite, weekly. Satellite is weekly. Anybody? Okay. Stop sharing.
So next is, how do you identify which stage a stock is in?
How do identify? If the rising price volume action is there, price is rising, then it is stage 2.
Can they have again about RSI and all those things?
Anybody has disabled this my sharing?
No.
Host. Because that's why the share screen is not coming. I'm trying. Anybody enabled it? One more.
Sir.
Enable me.
No, it won't come like that.
Now it is coming.
It is not clicking at all actually. Because
Sir, we can see your desktop.
Desktop you are able to see?
Yeah,
we are
again it
able to
went
see.
off.
No, we are seeing your camera and photo completely on the screen.
That's the thing. It's not clicking actually, share option. Return to meeting.
Now we can see desktop, sir.
No, that is mine,
Desktop you are
Dr.
able to
Harish.
see?
Sir, otherwise you open trading view, sir.
That's why I want to open it. I want to open it, but it is going up.
Ajay, sir, you can open trading view.
Yeah, I can open.
It is changing actually, suddenly. This will stop other screen sharing. Okay, I can stop it. Okay, now it will be visible actually. Now it will come now. Okay, now is it visible? This is screener?
Yeah.
Yes, sir,
Correct.
we can see.
Okay. Now one more thing, which I did about the valuations I will tell. Okay, just as you have opened, I will tell the valuations. 1 minute. This slide this is visible for the trend.
Yeah.
Yeah. So now as far as valuation among the growth investor is concerned, so we don't put the valuations. We don't give much of importance to the valuation as a growth investor. If we can see here, this is the last 1 year chart. Okay, from the May 2023 to this, how the price is improved. Okay, so price is continuously increased from almost 1384 to 4000. Now we look at the PE chart of the stocks or the last 1 year. As the earnings are increasing,
Trend.
PE has extreme degree of fluctuation. Now it was there 187 in the May, almost it has gone to 200. Now it is nearly 180. So in this type of stocks, if somebody is a value investor, you will not buy at the 200 P. Okay, 200 P is very high for them. But in a growth investors, as the stock price was rising, and we are getting a intermittent volume also spiking. So one needs to, based on the technically one can enter. Otherwise, what will be losing is, look at this opportunity size, how almost 1400 to 4000 opportunity. One could have missed if only goes through the price by looking at the price, because it was very 149, 150. They are likely to have, and that is determined based on the earnings. As the earnings goes on increasing, there will be increased demand for the participants in that stock. And this particular stock I have entered in the Diwali day, October. Okay. So here, I think so, October means this side. Okay, nearly 2000 level. Okay, 2000 and now 4000. So what will happen if somebody comes in the October? How could have been October? The price will see somebody. Okay, September, October, somebody will tell, okay, it is almost 170 is the PE. So after even if 170 PE, it has doubled from that level. Anybody has any doubt about this? Valuations? Yes. Dr. Harris?
Yeah.
Nothing, sir. They have doubt about RSI and all those things. Technical indicator and RSI. Did you use RSI? Sir, Ajay sir, can you mute the person who's talking?
I'm just seeing who's talking. I'm not able to locate him. Please mute yourself.
Dr. Neeraj Sharma.
Dr. Neeraj Sharma, please mute yourself or be silent at least. Thank you.
Sir, Ajay, Soren, sir, they have.
Now I'm opening my technicals. Okay.
They have what indicator, which EMI, what RSI? 3 questions.
Okay. The long-term investigation, you will become multi-EMI. So now is my screen visible?
Yeah.
Yes, sir. Visible.
No. This one is showing trading view?
Yes, sir.
Trading view.
Okay. So now what we are seeing is, these are 3 EMI are seen. Okay. The 11, 21 and 31. Okay. So one can use longer also, because it depends upon who is evaluating how frequently. Suppose I check, it takes me 15 minutes to identify every week once. Okay. So 21, again, individual stock, what level it creates a support, that is more important. Okay, each stock sits on volatility pattern, that is called average true range. If the stock price is beyond the double the average true range, then something wrong is happening. Okay. So it falls beyond. So normally I prefer that 21 EMA is good enough for me. So anybody? And if there is a crossing 20 EMA falls below the 51, again is a danger sign. As this particular stock itself we are seeing. Okay, when it started falling here, then stock continuously fallen. So what the EMA is important is whichever the period, depending upon the individual investment, whether it is a trader or a swing trader or a long-term investor. That's also important here. Anybody? Any doubts? So usually when the stock price is in a shorter time frame, EMA will be higher than the longer time frame. That's the thing. Harish Gopal sir, anything?
Or kuch,
Other indicator what I have used is same stock what I have shown here is.
sir, what is Shaktiman Mu in your trading account?
Huh?
What is a Shaktiman Mu?
Shaktiman. Okay, let me show. Okay, it is actually it is Shaktiman indicator. That's a purchased indicator actually. It is not a free indicator. So if you are telling, I will show you. Okay, Shaktiman. Okay, now this is a Technofunda investment group indicator. So what the thing is, while for swing trading, if this price, this background color is there, background green means relative strength. Okay. And if this becomes green, one can hold on. And once it become red, background also become red, price also become red. And this charts also become red, one can exit. So now the strength is A, B, C are there. C is the highest strength. Third thing, what you are getting a new price high is the flag. Each flag means new price high, making new all-time high. And this all-time high, one needs to add upon the thing. So now, so one needs to go on till, and it will give the entry and exit. And these are just a combination of relative strength, ADX, RSI, just they have been made, added up together. That's all. And the exit indicators are giving three indicators. One is volatility stop, another is parabolic SAR, and the EMA crossover. This three means XYZ. If one is activated X, two are means Y, three are activated, it becomes Z. That means one need to exit. Volatility stop, parabolic SAR, and EMA crossover. And background become red. What it indicates? Relative strength is less than 0. So we can, without needing this, one also can do simply. We can use without this also, or without.
So the next question is, what is that orange line in the indicator? I think basically all are confused about technical analysis. So this
long-term investors. Lesser role only
for this
the
any investing, we need to learn certain basics of technical analysis. So please go back and read or watch about technical analysis in our own videos, so that there will not be any doubts. So they are asking, what is that orange line? Yeah, that line.
This one?
Yeah. The top line.
No. This is the first price chart, candlestick chart are there. Okay, this is the Donchian channels only. Okay, I'll show you the thing is. These are the parameters. Okay.
Green line became red line. They are interested in that.
Okay. In the Donchian channel, the median time frame. Okay. So this is 10 periods, 123 are there, but monthly we use 65 entry and exit. The weekly 123. So because that needs to be customized individual. Okay, suppose this I have set the 65 is time frame median price. So here what it means, it becomes green means this allows me to enter, and red means allows me to exit. Okay, and in isolated I will not use, I will use in addition to the relative strength. So this is, I have customized it. Okay, so this is, I have customized. Again, this I adjust according to the time frame. Monthly I have to adjust differently. If I am using weekly, differently. Okay, so this is the thing, and always this I need to add with the relative strength. This is relative strength I am doing.
So, next
With relative strength. If this price become red and relative starts falling, it allows me to exit. Okay, and relative also you can adjust according to individual whichever strength want to, short or long time frame. 1 need to 26. I use like this for monthly time frame. Okay. So this is how now you will to see in that particular stocks. Okay, here it become red and also relative strength, it starts falling down. That mean give me exit. So now almost 1,000 rupees one has entered and started adding up based on the Donchian challenge, and also exit has been triggered when the relative strength are becoming going down, and also it becomes a red. And again, to remember, if it is a good quality stock, again if this crosses above the green, it becomes green, and I will re-enter.
So how to keep a watch list, they're asking, or how do you follow these 18 stocks?
Huh?
How do you follow these 18 stocks?
18 till 18 year 20 is free.
No, okay, sir, how to follow them?
No, 18 stocks means it takes weekly once I will check. Okay. For just to see, because it takes only 10-15 minutes it will take for technically to see. And quarterly result you will observe. Check for the quarterly result.
Dr. Soren, there were two questions. Dr. Harish, with your permission.
Yes, I'm driving, sir.
Yeah. So one question was, you mentioned diversification and limited optimal stock holding, core and satellite. In the core, how many funds we can maintain, and in satellite, how many funds we should have, stocks, I mean. That is a question.
Core is 15 to 18. Okay. And satellite, you might be changing 4 or 5 stocks, and because satellite will be rotating.
Yes. So it is not that we have to hold 15 to 20 in core and 15 to 20 in satellite. No. Satellite is always only few. That is 4 to 5.
And second thing, the risk reward will be different for the satellite. Okay. In the core, my risk is up to 20% drawdown. If you look for this one, okay, stock price has risen almost 5,250, 240, 250 level. After that, when getting exit, almost 4,200, almost 1,000 rupees down, my exit triggers. Okay, this is for the core. But satellite, I will not allow it to fall. 10% is the maximum risk I can take in the satellite.
So for
risk reward is completely different core satellite. Yeah.
So fundamental analysis, which is the website you recommend? And for technical analysis, which is the website you recommend, sir?
Yeah, TradingView is for technical and Screener for fundamental.
Yes. So Screener is for the fundamental, very Indian, locally made. So you have all the Indian stocks in that, and very popular by the investors. Is fundamental analysis is the Screener. And for technical analysis is TradingView.
Okay. And depending upon the individual shoot, one can customize the indicators actually.
Yes.
So able to see now this indicator. So this I customize from the Donchian channel. Okay.
So you have to go and read our technical analysis videos, which were recorded earlier in our YouTube channel. Spend some time there. So you will know the types of candlesticks, the types of reversal, and when is the entry, where is the exit. Most of the time you have to see the most important points where you should enter the stock, and what sir has just now said, when you must exit. So few things, basics at least you must learn before you catching up with this advanced information here.
And
So
this is one of the, again, the combination of Donchian with parabolic SAR. So this combination, what is this? Suppose, wow, simply I can see if the price is just above the median basis of the Donchian channel, I'll be holding on. And once this price starts falling, entering into this curve, then it tells me a danger sign, I may exit. Simply I will be following, and at 2.6, this is what you will be following 2018 till 2022, 2 years. Yeah. It is just simply going. So I'll then BBL.
So learning technical analysis is definitely a complex job, and sir has mastered it. So you have to also spend a lot of time and practice and know the basic vocabulary of the technical analysis. And the basic thing there is not only the lines chart, but also the candlestick charts. Sir has actually superimposed the candlestick with the line charts and various types of line charts and the volume charts. And that becomes a little more difficult for a new investors.
Okay, so look at this chart. This is of Barun beverages. Now price is going up and it is above my median. So I will not be exiting. But when it starts falling and enters into that may indicate something danger signs. So simply we can. And if I'll add that one also, Donchian Gorilla. Okay, anybody has any further doubts?
I don't think so. We give paid courses, nor we will give tips for which stocks to invest. This is only a purely an educational and awareness teaching platform. So kindly don't ask the stocks names and also don't ask the paid courses. We may have physical hands-on workshop in the due course in the next few months, and also in our National Pedicon conference of IAP to be conducted in Hyderabad. People who are interested can join, and we'll have a hands-on training during those sessions. So if there are no questions, I will close up with the closing remarks. Dr. Harish sir, anything you want to add? Yeah. Thank you very much, Professor Soren sir. Wonderful talk, wonderful presentation, and many things are becoming clearer and clearer. You have really upgraded your talks from the last 3 years with the same presentations which we have seen. More information you have added, higher analysis and insights in the valuation, in the questions like how to select, how to see the trends, what to see the systemic analysis and unsystemic analysis, and also the various types of Donchian channels and the trading view and the screener, and how to, when to, why to buy stocks. So thank you very much, sir. Few points which the F3 team wants the participants to remember is that don't break the rules of the stock market, which you are learning here. Your money is very hard-earned money. Don't lose them. Try to win always, but at least don't lose. If you don't lose, that is itself is a win rather than win or lose strategy. So your strategy is that money should work harder for you when you're sleeping, and it should be working, and you should have a peaceful nights. Don't go by tips. Don't use penny stocks as your investment strategies. Don't apply for IPO or NPO or NFOs. If you are a newbie, stick to mutual funds. If you are still very difficult to choose the mutual funds, go to index funds and go to ETFs. When you have learned sufficient knowledge, your practice and experience, and then you can go to the stock selections and maintaining the stocks, rebalancing it, and also adding up, positioning, and sizing up. It is all the matter, end of the day, is how much size you are invested in each stock and how you are maintaining it. So it requires higher intelligence, it requires higher analysis. So basic thing is fundamental analysis, be thorough with it, learn, and learn. And technical analysis, try to learn. Self-reliance is the motto. Mind management is very important. As Dr. Harish Gopal always says, 80% is mind management, 20% is knowledge. Dr. Soren sir has already alluded to that. You have to control your monkey mind. You have to meditate and you have to be calm, quiet, and it's a long-term process. Do not do intraday trading. You can only do investing and trading with a long-term perspective. And everybody is running their own race and in their own track. Do not try to outbeat your friend. Do not try to mimic or follow somebody else who's investing. So the motto is profit with peace. If you are not sure what you are doing, you're not understanding it, please don't go there. Capital market in India is like a big ocean, and we are all like a small and big fishermen. Everybody can catch something in that ocean, can take something in the end of the day. So don't try to always try to catch a big fish. What sir has mentioned about gorilla and monkey. So to be a gorilla, you have to be of that size. You have to be a smaller investment, be happy with the returns between 12 to 14%. Don't try to go for anything beyond 25% returns. Anything beyond 25% is fraud, and you don't believe that. You go down to 10 to 12%, which should beat the inflation, which should beat the income tax returns which you pay. And if you have more than that returns in your portfolio, be happy with it till you learn little more higher knowledge. So run your own race. And market is always there. Market is not going to become zero. So don't be in a hurry to try to extract profits from the market, because our indices like Sensex and our NSE index, BSE indices will never become zero. In the opening slides of this talk, Dr. Soren sir has said, what is our GDP? What are our strengths? What is manufacturing? What are the various economy, which of the strength of our country, which is going on? And remember PDF, patience, discipline, and have faith in your own strategies. Do not do analysis on your broker's website. If you are a broker in XYZ account and a Dreamer, don't go by the recommendation of that broker's analysis. Do on a third website, like you have a neutral website or independent websites like TradingView or the screener, what sir has already mentioned. So, and time frame is always, remember, is 7 years. It is scientifically known to all of us that 7 years is the long term. If you try to exit or you try to play around with exit and entries, you will have more expense ratios and more chances of losing your money. And most important, if you want to learn in this elaborate way sir has mentioned, to achieve this level of confidence, this level of expertise, stop all the WhatsApp groups. Spend at least half an hour to 1 hour every day and be focused and have a distractible time every day. And if you read books and don't see any reels and don't see too many videos of any other people, there are a lot of false, fraudulent influencers on YouTubes. So go for the good sources like we all do in our medical practice. So money should work hard when you are sleeping also, and also protect your hard-earned money. Don't ever lose in the market. If you don't gain, it's enough. That itself is a win, as I have already been telling you. So with this few words, let us give a big round of applause to Professor Soren sir for giving us a very good exposure today. And please wait for and continue to put your questions in our WhatsApp group. We are about 1,600 pediatricians and doctors from all over India and all over the world. And spread the good word and be careful, be patient, and have a long-term view for your investment portfolios. With this, we take leave and we close the today's session, and we'll come back to you after alternate Sundays with more topics, and will be posted in our WhatsApp group. Thank you very much. Good day.
Thank you. Thank you. We can leave.
Yeah, we can leave.
Yeah,
Thank you very much. I'm just closing the recording session. That's why I'm taking some time. We can all leave. Thank you. Bye.